Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining. It's very much appreciated. And in today's packed program, I'm going to be having a look at the Brexit indicators and why this time around it doesn't seem as though they will be working in the same manner that they've worked in the first 3 cycles up to now, and why we may have to rely on one of the signals I've been showing you during the course of this 4-year cycle. We'll also be having a rundown on the various timeframes to make head or tail about where Bitcoin is, where it's heading in the short, medium and the long term. And finally, after many requests for altcoins, I'm going to have a look at exactly where the Bitcoin dominance is and how the altcoins are positioned for the coming few weeks. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to start off with the Bitcoin top cap. This is one of the Brexit indicators that we've been employing during this bull market. And what we've really been waiting for is for the price here to come and connect with this top cap indicator. And the reason for that is that if you look at all of the peaks of the previous cycles with Bitcoin, you'll see that all of the major peaks have actually had a connection with this particular line, apart from the last cycle. So if you've been through the last cycle, if you were here waiting for the top of the bull market, then we would have been expecting for the price to have come and connected with the blue line. But unfortunately, it didn't happen. So up to here, the top cap was a 100% indicator that gave us a signal to wait until the price hits the blue line and then you can exit from here. And unfortunately, in the last cycle, this failed to happen and it caught everybody unawares. And so instead of actually going up there, we actually had a double top and then came back down. So what's the reason why I'm showing you this? Well, up to now, we have one other indicator. It's predicted the top of the bull market with 100% accuracy. And what's happening with that indicator, it may be following the top cap in this current cycle where maybe that signal doesn't actually trigger off. So what am I talking about? And of course, many of you will have guessed by now, I'm talking about the pi cycle. At each of the previous peaks, we've had the pi cycle cross of the green and the red line, which are the 111 and the 350 simple moving averages multiplied by 2. So we've had these crosses. Every time the green line crosses the red line, we've had the tops. But unfortunately, at the moment, if we are going to have a traditional end of the 4-year cycle, it doesn't look like this is going to happen. A lot of people in the comments keep asking me about this, and this is one of the reasons why I'm covering it, because you can see quite clearly that we're getting towards the end of the bull market, if indeed we are going to have a traditional end of the bull market. But from this particular exit indicator's point of view, you can see quite clearly the red line and the green lines are very far apart. So unless Bitcoin has a massive increase, the likes of which we haven't seen for a long time, then the chances are we're not going to get the normal cross that we would have got. And the only way we would get this if there is an extension of the current 4-year cycle into the first or second quarter of 2026. So if that isn't going to be the case, what can we rely on in terms of a Brexit indicator for those of us who want to actually exit as close to the top as possible? And I am aware and I do respect many people don't want to exit at all. They're long-term holders, and come rain or shine, they're just going to keep on riding this to wherever it goes, to 1 million, 5 million, 20 million, etc. And that's absolutely fine. So really what I'm talking about is for those people who wish to reduce their positions or exit 100% towards the top of the bull market. One of the more reliable indicators that will trigger towards the end of the bull market is what I've been showing you for a long time, and that is the 8 EMA on the monthly time frame. And before I start getting comments that the one I'm showing you here is the 3 EMA, this blue line is not the 3 EMA. This indicator actually has 3 EMA levels. That is the 8 EMA, the 21 and the 34. And the one I'm showing you, the blue line, is the one that's the 8 EMA. If you look on the style, you'll see that's the only one that's being ticked. So the blue line is not the 3 EMA, but this indicator is actually identifying 3 EMAs, the 8, 21 and 34. And the one that's really important for the top of the bull market is the 8 EMA, which is what I'm showing you with the blue line. So here we have it. As soon as you get in the time band of the end of the bull market, which is what we're currently in, and this is why this is important. It's the 8 EMA. Once that's broken, you'll see that that's where it ends up, at the bottom of a bear market. Once that's broken here, one more time, was a good signal to actually prevent yourself from riding all this down here. Same here, you would have avoided most of the bear market here. Same again, we were right in the time band of the end of the bull market, and then you would have avoided the 75% fall. And currently, this is exactly where we're at the moment. We're still above the 8 EMA, and now that we're in the time band of the end of the bull market, this is the one signal that we've got to look out for. If this falls below the 8 EMA anytime soon, and I'm not really expecting it this month because we haven't really had much of a blow off top. So in each of the previous cycles, we've had these blow off tops before we get to the end. Even in 2021, we got these big monthly candles before the end. So this is what we're really expecting. And you can see quite clearly, we haven't had any sign of that big monthly candle. And as I'll show you with the weekly and the daily cycles, it looks like highly probable we're going to get one or two of these big monthly candles in October and November. So for those of you who are waiting for the pi cycle to cross over, as we're getting deeper into the cycle, it's looking more and more unlikely that the two lines are going to cross before the end of 2025. Now, those of you who think that waiting for the 8 EMA, like for instance here, you would have still run down this amount before you realize that this is now into a bear market. Same here. So it's not a signal that will give you the exact top like the pi cycle, because you will have to wait until the 8 EMA is triggered off. So for those of you who want an early signal, you'd have to go to the weekly time frame to preempt the monthly one. But that way you may get a false signal. That's the only danger with that. So the risk is that you might get a false signal on the weekly, and then you might be faced with a bigger move in a week or 2 weeks time after that. But it is something that you can actually preempt, especially after some blow off top type of candles that we get between now and the end of December. For those of you who don't know what I'm talking about, if you go to the weekly time frame, the 8 EMA, when we got into the time band of the end of the cycle, which was around October, November, December. So here we can see quite clearly that this was the candle that just came to support it, but it was this candle, the weekly one, that fell below the 8 EMA, and the close of that was at 57,321. So the top was at 69,000. This candle closed at 57,300. So the weekly was preempting the monthly, which was this candle. So this candle actually closed below the 8 EMA in December 2021. So we'd already topped out in November, so you'd have had to wait one more month to confirm the end of the bull market. And this candle closed at 46,202. So for those who preempted the 8 EMA close for the end of the bull market, could have used the weekly in the time band. But the only danger with that is that, let's say that this particular candle in the last cycle actually closed just below the 8 EMA, around about 58,000. Obviously at that point the monthly hadn't closed for the November, so you could have got easily this one closing below the 8 EMA, so you get out, but then the next one makes a bigger high, so you miss that bit. So while you get out at this point, you might miss this big bit here. So that's the risk of using a weekly preemptive candle before the 8 EMA on the monthly time frame. So it's something to think about, that we are now in the time band of the end of the bull market. The traditional signals so far have not been triggered off and don't look as though they're going to be triggered off before the end of this year. And as we found out over the course of this 4-year cycle, this cycle hasn't really played out like the previous 3 cycles. So in a way, it was probably expected that they're not going to be behaving in a way that we've been used to over the last 3 cycles. But this 8 EMA is quite a good signal, and of course we'll keep monitoring this over the course of the next few days and weeks. Now the narrative is currently, and the thing I want to really look at, which is giving us a very good signal that we're about to have some sort of a blow off top as we increase the liquidity for the markets. And that is that if you look at the US dollar, we've been running down on the 8 EMA. You can see once we broke it up here, we've been using that as a resistance all the way, and even now it's now got rejected one more time. So there looks like there is going to be one more leg down here to whatever level it's going to go down to. And if we have a quick look closely at what's happening here, this particular pattern of the candles and how they're actually forming, the first thing to notice is that we did try to make a counter trend rally from here. We had a bullish divergence on the underside, and that caused the move for the dollar to get up to here. But since then, you can see that we've got a hidden bearish divergence on the RSI, which made a higher high, while the top side of the price for the dollar made a lower high. So what we're now seeing is a rundown, and for that playing out here. Now, exacerbating that is the types of candles that are forming here. You can see quite clearly at the top of this trend, what we've ended up is with a gravestone doji candle, not once, not twice, but 3 times we've got a rejection of higher prices for the dollar. And we've been making lower highs along the way. So what this is now setting up for is a big move for the dollar to the downside, which increases the liquidity for the markets and the commodities like gold. So we are due for a big move for the dollar to the downside. So this now feeds into the time frames that I'm going to show you for Bitcoin and why it seems to be setting up for a big move in October. Okay, I'm going to start off with the monthly time frame. And the first thing we should notice is that the 8 EMA, we can see quite clearly that the price is certainly in the upward trajectory. It's not come back to even find support on the 8 EMA yet. So the bull market, according to the monthly time frame, is all intact and looking to go to much higher levels. And currently that price is at around about 103,700, call it 104,000. And what we were expecting for the month of September, because it is the final month of the current 60-day cycle, as well as the final stages of the current weekly cycle. So I would have expected this to be a red candle, especially following this bearish looking candle at the top of this trend here. At the moment, it's holding up very, very well. And in many ways, because of the time band of the 4-year cycle we're in, you would expect quite a lot of bullishness here. And this is what this candle is showing, that it has actually held up very well. If you've been watching my programs, you'll know that my lower side target was around about 98,000, that should the Bitcoin price fall below the 110, there were 2 targets I'd given you, 106. And then if that was to be broken, then we're looking at around about the 98,000. And this is where this one came into play. So at the moment, we're seeing some bullish action on the monthly time frame. Okay, so this is a big one now. This is the weekly cycles, and I'm going to take you through this, hopefully slowly, so you can all understand this. This is the current weekly cycle that we're in here, which started in April, which we'll call the Trump tariff cycle. From here, at the bottom at 74,000. This is a 26 weekly cycle, which ends at the end of September, beginning of October. The exact 26 weeks is on the 6th of October here, there. And in between, you've got 3 60-day cycles. The first one here to the green line, the second one to the green line here. And as you can see, we're in the final third of the 60-day cycles here. Very important to understand that this is the context. And that context is that you get a rising portion in the first of the 3 cycles of the 60-day cycle. Then you get some sort of a consolidation, but you would expect right translated cycles in the first 2. And if we're going to get a failed cycle or a left translated cycle, it's always in the final third 60-day cycle. And this is exactly what we've got. We're currently in a failed 60-day cycle. And I'll go through that in a minute when I show you the 60-day cycles. But the most important thing to remember here and to take away from the weekly cycles is that what we're waiting for, the end of the current weekly cycle, which will be between now and the beginning of October here. And always remember, just like the first 60-day cycle of a new 26 weekly cycle, this is where you're going to get your most explosive moves. So this is where you can expect some sort of a blow off top. The first monthly big candle will probably be here in October. This is where you'll see the higher probability of it breaking above the 124,000. And as I mentioned before many times, because we're in a failed cycle, it's unlikely we're going to get any test of the 124. And this is exactly what's happened so far. There's too much weakness. So the failed cycle was giving us an early signal that there's too much weakness in this current cycle for it to retest the 124. So this was highly unlikely to do. Of course, it can do that any time. Please remember, this is a game of probabilities, but certain signals are giving you which way the propensity pendulum is swinging. And that propensity is on the higher side for it to not go towards the 124 in this current cycle here up to the end of September. And what we're really waiting for is a rundown and a signal for the end of the current weekly cycle. And this can come any time. It can come this week or next week, because we are now in the time band of some sort of a pullback into the end of the current weekly cycle. And that can come at any price. We're currently at around about 114,700 as I'm doing this video, but it could be at 113,000, 110,000, or 106,000. Or indeed, if it really does want to scare people and shake everybody out, it can go all the way down to 98 to 100,000. But this is the main takeaway. We're right in the time band of the end of the current weekly cycle, and we're waiting for some sort of a pullback to signify and signal to us that we've come to the end of the current weekly cycle, and we'll be then waiting for the explosive move from October onwards. This is what I'm expecting according to what the cycles are doing. Of course, if it doesn't do that, that's just the lower probability playing out. But I would be really quite shocked if we didn't get that big move in October and possibly November. But we'll obviously cover that as we get nearer the time. So just be aware that we're now coming to the end of the current weekly cycle. Okay, moving on to the daily cycles. Very important we get our head around this. And that is, as I've just explained on the weekly cycles, we're in the final 60-day cycle of the current weekly cycle. And that's why we've got the red line here. So that's why we've got the red line here. End of September, beginning of October. So we're right in the time band now of coming towards some sort of a decline into this 60-day cycle. And currently, from the end of the last cycle, which was back in August, we're currently today on Monday the 15th of September, we're on day 43 of the cycle. So we're right at the beginning of the time band where we expect some sort of a conclusion, i.e. some sort of a decline into the 60-day cycle low to end this current cycle and begin the next cycle. And we've had cycles that have ended on day 39 as well. And what we know with the 60-day cycles, that generally speaking, we have around about 10 to 15 days either side of when the cycles will end. So now we're on day 43, we're coming to the start of that band. And this may well be the pullback that we're now looking for. So this can come back down now, this week, maybe even into next week, and then put in a bottom. And the question is, what price can we expect this decline to come into? And if you use the Fibonacci retracement from the bottom of the current cycle here, and you take it to the top, if I move this to the left, then you'll see it a little bit more clearer. So currently, as you can see, the price is coming up to this 23.6 on the Fibonacci tool, 114.4, and then the 38.2 is the 113. This makes a lot of sense. If we can get down here in the next few days, even today, you never know, and that could possibly be the bottom for this cycle. And then if you see explosive moves here, that would confirm that that's the bottom of the cycle and the beginning of the new cycle in October, November, which would have obviously started early. So we could get an early end to the current cycle. So this is something that we must be aware of. The other possible targets in this decline that we're currently in, by the looks of it anyway, is 111,000, or more than likely, I still think this is the higher probability. So I'd say 50-60%, we're going to probably go and retest 110. It just seems the most likely figure. It's a whole number, 110,000, plus it's a 61.8 where Bitcoin has a high affinity. So this is where I would expect some sort of a decline into the 110 and end the cycle somewhere here between where we are and the end of September. And then you get this explosive move for the start of the new cycle. I think the way this has panned out, if you watch my last week's program, you'll know that I put these three levels. The 113,000, this is where it was finding a lot of resistance. And I said that it's unlikely that we're going to close a daily candle above this. But what the Bitcoin price has shown is that the next target that I put down here, the 116, it's showing a little bit more strength than one would have expected for a failed cycle. This was the failed cycle here, where the start of the cycle was protruded and closed below the start of the cycle. So that gave you a failed cycle. And the message to take from that was that this is unlikely for the price to actually go and retest this level here because of the inherent weakness of what this failed cycle was telling us. So now that we've reached the 116,000 target, our final target was the 61.8 at 118,000. We can still go up to that point yet. We've got the FOMC meeting coming up at 2 o'clock Eastern Time, FOMC interest rate decision, and that could trigger the price to go to that 118,000, or if it becomes a sell the news event, that might be a trigger for the price to come back down. At the moment, with their interest rates, what we can see is that the current target rate is at 4.25 to 4.5, and what this target rate of probabilities for this meeting on the 17th of September is telling us is that 94.2% probability that we're going to get a 25 basis points cut down to 4.0 to 4.25. The market isn't even pricing this rate to continue, and instead what we've got is a possibility of a 50 basis points cut to 3.75 instead, which is running at 5.8%. So it is unlikely that this is going to happen, and hence the market has priced in a 25 basis points cut rather than a 50 basis points cut. But if we get a 50 basis points cut, then you'll see that the price for Bitcoin was more than likely is going to go and hit the 118,000 and could even go much higher than that. But in the absence of that, because as we can see, the 25 basis point cut has been already priced into this rally that we've had. So what we may get is that if we do get a 25 basis points cut, that may well be a trigger for this decline into the end of the cycle. So there you have it, just a quick summary. We're waiting for the decline into the end of the current cycle for both the 60-day cycle as well as the weekly cycle, because the next cycle is the beginning of the weekly cycle as well as the beginning of we should get a double whammy of a big move here. This is what I'm expecting. Let's see what happens. Nobody knows the future. I don't have a crystal ball. I'm just reading the cycles as I would expect those cycles to play out. And on the whole, they've really played out very well according to the narrative that you would expect from the cycles. And many people are always asking about what kind of a top can we expect with Bitcoin. So what I did for the private members here was to draw this particular channel and showed them in the last members video that the possible top could well be in this channel here. Because since the beginning of the bull market back here at the end of 2022 at 15,000, we've been really weaving up and down on the top and bottom of this particular channel here. You can see quite clearly, we can notice here that we've had a very good respect of this particular channel all the way through up to where we are now. And if this was to continue, and currently where we are in September, the top of that channel, because if we're expecting a blow off top, surely it's going to take it to at least the top of this channel. So the top of the channel in September at the moment is around about 160,000. If you take that to October, that's going to take it to around 170,000. And in November, this goes up to about 180 to 185. And in December, we're talking about 190,000. So this would be a very good indicator. Obviously, nobody knows what the top is going to be. But we can use these types of tools, the trend lines and the various Fibonacci retracement tools, to give us some sort of a ballpark figure of where this could end up. So these are the prices from 170 all the way up to about 190, even possibly 200. Seems the most likely end to the bull market if indeed we're going to come to the end at the end of this year. Okay, I'm going to show you a couple of charts which are very important. A lot of people have been asking me in the comments about the altcoins. So some interesting developments going on here, which I think we should be aware of, and that is that I'm expecting the altcoins to really take off, especially when Bitcoin takes off. I think the altcoins will probably outperform Bitcoin, but not only the altcoins, but also, as you know, we run the private membership here with the Bitcoin miners. And I'm going to show you two charts. The first one here is the market cap dominance for Bitcoin. If you put a channel from here at the bottom at the end of 2022, and you take it to this support line here, that we've now broken that support line. And what I've done here is I've put down the various markers with the Fibonacci retracement tool. We're currently at the 23.6 here. The dominance topped out around 66%, and currently it's at 58%. And we're just about breaking down below that. And all that's really meaning is that the altcoins are outperforming Bitcoin. And the next level to watch out for, where you'll see some consolidation like this, is going to be the 38.2 at 53%. So expect altcoins to outperform Bitcoin in the coming days and weeks until it falls down to 53%, eventually down to 50%. And you never know, it could go down all the way down to the 61.8, which is where the altcoins will probably top out. So this would be around about the 45, 46, 47 on the Bitcoin dominance. Very important. If I zoom in here, you'll see that there seems to be some sort of a breakdown occurring. So the 8 EMA, you can see that at the top of this channel, it broke through the 8 EMA on the weekly time frame. And then since then, we've been finding resistance on that 8 EMA. So you can see with the 8 EMA facing down, this is going to prove quite a lot of resistance. So this looks like this is how it's going to run down now. And on the daily, we can see that the bottoms of these candles, we broke down, we're coming back up, but more than likely, we're going to get resistance at the 21 simple moving average on the daily chart. The ATM is fallen below the 21 simple moving average. So you can see the weakness is inherent here in this move. So I would expect with a high probability for this to go much further down. And that seems to tally with what's happening with the Bitcoin miners. And that is that the current chart for the Bitcoin miners, you can see that they've outperformed Bitcoin from April, from the end of the trading session on Friday. The Bitcoin miners, yes, you heard that right, the Bitcoin miners, which had been underperforming for such a long time, finally turned around, and we've had an outperformance from the majority of the Bitcoin miners, apart from one or two. You can see this is the WGMI chart against Bitcoin. So this is the ratio chart between WGMI, which is the ETFs for the Bitcoin miners, against the Bitcoin price. And this is where a lot of hate came towards the Bitcoin miners, where it was running down very badly. But since April, you can see it's been an incredible ride, and in the private member section, we've been following this now for the last 2 years, and our expectation there was for us to get to the 26th level here on this white trend line. But obviously, as you can see, the more times you test a trend line, either to the downside or the upside, the more likely it is to break through. So we were expecting this breakthrough, and we've now got a big move to the upside. And this is what's also telling us that there's a big blow off top for the Bitcoin price to come, because the Bitcoin miners are on a leverage play. They haven't shown much of that evidence until recently from April, and we're expecting this to continue with a big explosive move to the upside. So this is the time where the Bitcoin miners are going to really come into their own and should be outperforming Bitcoin in the next few weeks and months until the end of the bull market. And if you're interested in joining us with the Bitcoin miners in the private member section, where we focus both on Bitcoin and the Bitcoin miners, we do extra 2 videos per week with the private members on a Wednesday and a Saturday in order to keep abreast of all the latest information in terms of what's happening with the charts on a daily basis with these updates. So from Monday to Friday, we do a daily update at the end of the trading session where we look at exactly what's happened, because in this space information is key. So you'll see with all these updates that we do, we go through a thorough update of what's happened with Bitcoin on that daily basis, and posting a lot of these charts to know exactly which way the wind is blowing for Bitcoin. And as we come to the end of the bull market, it's extremely important to be up to date with this. The members videos are designated with the green star, and we were looking at the possible tops for the Bitcoin miners in the last video that we did a couple of days ago on Saturday. And if you want to learn about what the ratio trades are, below all of my videos, you'll see that there's a new members introduction video where I go through the ratio trades in a lot of detail of how they work and how they've been very successful so far. So out of 46, 47 ratio trades, like you can see here, from the beginning of 2024, these are the profit and losses. The blue figures are in the profits and the red figures are in the losses. So you can see the majority of them, over 90%, have been actually in profit. And if you're interested in joining us in the private member section to get a market update every single day, Monday to Friday, as well as a couple of dedicated members videos on Wednesday and Saturday, and to keep up to date with all the latest information regarding Bitcoin and the Bitcoin miners, then all you have to do is below any of my videos, you'll see the join button here. But if you're on a handheld device, you may have to go into the description box, and this Bitcoin Miners members join link, the red button here, if you click on that, you can join us for less than 50 pence a day at £12.99, which is 1 coffee per week. If you can afford 1 coffee per week, you can join us there. Now, I have to apologize that last week a few people tried to join the membership. I wasn't aware that all the memberships had been taken last week, but this week there's a few spaces left. So if you want to join us, there's just a few spaces left. And please remember, you can cancel at any time. There's no obligation to continue or any cancellation fees or anything like that. It's a very simple membership. You can just join for 1 month, have a look at what it is and whether it will add value to you. Okay, before I go, just want to mention, you might have noticed something on this BLX chart, the Bitcoin Liquid Index chart. The price here has now stopped at 108,000, and this is the last candle that was printed. That was in August. There's not been a monthly candle for September, and there won't be going forward, simply because if you look up here on the left hand side, there's a notice of service of termination of this particular chart, that on September the 1st, the Brave New Coin API went offline, and they're saying that you can still view historical data even though the BNC charts will no longer be updated. So sadly, the BLX will not be updated anymore on the trading view for whatever reason. So just in case, for those with a keen eye will have noticed that the current price on the BLX has actually stopped at 108,840. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.